please understand that any advice in today's session is of a general nature only and that your personal circumstances have not been taken into consideration. Alright, so we've actually got a little bit of a smaller class than normal today, so you guys are actually quite special. I'm going to show something that I've never shown before, so for those that our regulars that are not here today, well, they get to miss out, I guess. I'm going to look at a strategy which is based around the support and resistance, and I'm going to show you a few methods to basically identify the correct areas in charts. A lot of people get confused when we start to draw lines and identifying hot regions in a chart, but I'm going to show you a method that will make it a lot easier for you. Okay, and when we unify this method with our price action knowledge, the probability of the trades increase significantly. Okay, so we'll get straight started. So essentially what I'm doing today is I'm trying to give you a method to be able to do the following. So for example, what we want to do is we want to be able to find areas of resistance. So when the market comes up to those areas and hits them, what we're trying to do is we're trying to spot when there is a high probability that this will occur so that we can trade in this direction as such. In essence, this is a counter trend trading method. The trade that I'm going to concentrate on is the counter trend trade. So in other words, to simplify it, what I'm talking about is when the market goes in one direction and then changes and kicks off in another direction. So this is the trade that I'm interested in. I am going to use virtually no indicators. There is one indicator that I'm going to use, but the only reason that I use it is simply to assist you so that you know how to draw the line. The only true indicator that is being used in this method is this line that we will have to manually draw onto our charts. Okay, now so there's no MACDs, there's no stochastics. You know, to be honest, I think a lot of those indicators are absolutely useless. They're all lagging indicators. And do we understand what I mean when I say a lagging indicator? Is anybody confused? Can I just get a show of hands? Do we know what I mean by a lagging indicator? Yeah, a few of you do. Yep. Okay, for the ones that don't know, basically what it means is something has to happen, like the price has to move first. We record that price, the indicator does a mathematical equation and then gives you a result. So something has to happen first before the result is given, so it's always behind the 8 ball. Whereas a good support resistance type trading method could be considered a leading indicator, because if we look at it, let's just say for example that we had a line, what we thought, let's just say that we had a chart that did this, and then the chart is over there at that particular point. So this is where the chart is right now. If we draw a line over here, okay, I haven't drawn it the best, but let's say that goes there, and then the chart starts to move over there. This region here is a leading. So we know this region ahead of time. We don't have to wait for the MACD to tell us that this is going to be a region of interest. Okay, so this is what I'm talking about. A lot of the trading that I do on Mondays is effectively based around this. When I say to you guys, look out what happens at the edge of the channel and things of that nature, that's exactly what we're doing. Okay, so that's what I'm going to concentrate on today. The type of trade that I'm specifically going to home in on is what I like to call a triple top or a triple tap type trade. It's actually quite effective across, I haven't tried it on a 5-minute, for example, but it's quite effective from at least 15-minute time frames onwards. To be honest, only because of how busy I am, I mostly trade it on a 4-hour chart. I don't know why, I just do. But feel free to experiment. I know that it works on a 1 hour, it works on a daily. It just depends. The higher the time frame, the larger the pips to hit your targets, and we'll talk about all that as we go along. Okay, so I guess the method for lack of a better name, we're just going to call it a triple touch, okay? And I'm going to require a couple of indicators. And again, really, the main indicator is going to be the line that we are going to manually draw onto the chart ourselves. But I will use a zigzag indicator with a setting of 7, 3, 3. Now that's very, very important, so make sure that you take note, okay? And we're going to use a fractal. We don't worry about it. We don't even really need the fractal. Okay, the zigzag is really all that I need. I've got it on my charts. I think by default I've got it all over my charts these days. I never take the indicator off, but I'm not really using it. Okay, so this is the only indicator that we're going to require. Basically, let's say that the method is good from 15-minute charts plus, okay, although I prefer my 4-hour chart. All right, and it's purely based on me and the way that I trade. So for some of you, it might be different. And what we'll do is we'll experiment. We're going to try all types of charts and timeframes, and we'll see if it works. Okay. The method is predominantly support. All these things are in my head. I don't actually have it written up pretty, so I'm trying to type it in now so at least I've got it on recording. Support, resistance, and based trading with price action triggers. It's a counter trend method. In other words, we're looking for turning points. Good thing about turning point strategies is, whether you guys are aware of this or not, counter trend or turning point strategies are psychologically easier for us to trade because we get so much more satisfaction when we pick a turning point. The message that our neural system inside of us receives when we get this type of trade correct is much nicer than when you get this trade correct. Okay, I don't know why, it just is. So there's a tendency that I've been doing this for like about 5 years, teaching people how to trade, and I noticed that all of the strategies that I show that are counter trend based are the ones that most people like, as opposed to trend based ones. And it's got to do with the fact that we get a much more rewarding feeling when we pick a turning point as opposed to just picking continuation. Okay, that is a fact. I don't know why, it's just the way it is. All right, so let's any questions so far? Are we all still awake? Yes, we are. Thank you. Okay. You guys stay awake, I'll stay awake as well. All right. So the aim now is going to be, our aim is to draw good support resistance lines. Okay, that's the aim. So let's bring on a chart and let's talk about this. Okay, so basically, for those of you, some of you may have not used a zigzag indicator, so let me show you how to find it. It's on my chart right now. Give me 1 second. Okay, so the way you find it is on the little plus sign up the top here. This is where I pick up my indicators from. There's many ways to do it, but this is how I do it. And then for the zigzag, I believe you've got to go into the custom folder and you've got to scroll all the way down to the bottom. And you will find that there's zigzag, select it. Now notice, I need you to change these numbers to a 7, a 7, 3, and a 3. Okay, so this is the most important part of this indicator, that the settings that I need you to have, 733, and then pretty much I think the rest is just the colors. I don't like red. I'll just make mine white. Okay, and then just click OK. And now notice that zigzag line that just appeared on my chart. So this one here, this is my zigzag indicator. Okay, I've got a fractal on my chart as well. I can really just remove it. I don't need it at all. And that's what my bear chart will basically look like. Okay, any questions so far? Once you've done this, right click on your chart, go to templates and save it, and just call it whatever you want to call it, so that you don't go through the process every single time. As you may have noticed or not noticed, currently I am on a 4-hour chart, and let's start to show you the first step. The first step is I want you to start to join consecutive tops on your indicator. So what I mean by that is, let me just pick a region. Okay, so let's just zoom in to whatever current, I'm looking at a Euro Yen current price right now. Now I need to join consecutive tops. Okay, so for example, if I chose this top and that top, are they consecutive ones? Are they 2 in a row or not? What do we think? They're not, because this is another one in here. See, there's one in here. Okay, so these are not. So 2 consecutive tops would be these 2 here. All right, so I could not do those. Okay, what about if I said that one and that one? Would they be consecutive? Okay, they would be consecutive. However, this point here is still not confirmed. Okay, because if this keeps going down, what you'll find is that this line will now get stretched longer. Okay, so that is still not a confirmed point. So of this current chart, I don't have a situation. So what I'll do is, let me just scroll back a little bit so I can find an example so that I can show you what we're looking for. Okay, so let me zoom out a bit so I can see a bit better. Just trying to find the real simple one. Okay, here's one here. It's not the best one. Here's a better one. Let me zoom in a bit. Okay, if we have a look at here, now it's important that you have your 733 setting, because if I have a different setting, this line will pick different tops, okay? But if I go there, that's 2, okay? I only need 2, remember? So when you're drawing this, we need 2. So 2 consecutive ones, so that's number 1, and this is number 2. So once I have 2, what I can do is, what I want you to do is, I want you to grab a line and just draw across the tops of these. Now try and get it, doesn't have to be perfect, and then what I want you to do is we extend the line forward, okay? Because if this was real time, let's say if the chart was right there, let's just say this is all we could see. All right, at this particular point in time, we would have said, yes, that's 1 and that's 2, and we draw the line and we push it forward to see where the next level is. We can also actually draw a line off the bottom here, provided that this line started to go up, and we can draw one in that direction as well. So let me just bring the chart back now. I'll have a look at some live examples where we can possibly find some. Once you've got your 2 tops, okay, you got your first and your second, at that point we draw the line, and we are going to be trying to trade off the 3rd point. Remember the name of the strategy, or whatever name we gave it right now, we called it a triple touch. So our trade is going to happen off our third touch, which makes it really easy for you guys to draw the line. All right, so your first point and your second point have been confirmed. So then what you do is we extend the line through, and when the market's over here, we know ahead of time, so it's not a lagging indicator, it's a leading indicator. We know ahead of time that we are interested to see what is happening right there. Okay, any questions so far? Is anybody like totally confused and not understanding? No, we are all good? Okay, so now what we're going to do is at our third touch, because that's what we're interested in, at the third touch we are going to apply price action. Okay, is there anybody in the room that is not familiar with price action? Can you just, if you are, just give me an indication, give me a question mark or something. I just want to know who is not, because you might get lost right now. No? Everybody's okay with it? All right, if we're all okay with it, I'm just going to apply the principles. If you're not, what you need to do is you need to go back and have a look at the price action strategy. So this is a method which is building on something else so that you understand how to trigger the trades. Okay, so what I'm going to do is I will be looking for any price action candle formations which are turning points, which basically include inside candles, it includes engulfing candles, it includes like a shooting star or a hanging man, it includes railroad patterns, and I think they're the four main ones that we've actually used in the past. Okay, now remember that I always tell you guys, if you get these candle formations, if they happen in the correct spot, there is a high probability of success. Okay, but these patterns happen all over the place, and if we choose the wrong spot, well then it's useless. There's no point trading it. All right, so essentially the third touch region, the region where we get, if we draw our line touching 1 and 2 at the third touch region, there is a high probability that if we get our candle formation, we can get a good trade out of it. Okay, the beauty about this system is as follows. If the third touch does not, so for example, I don't just put an order here to sell, because what could happen is the market could just continue up, okay? And in fact, the third touch never really happened. It just went straight through it. Now, if I wait for price action confirmation here, I'm never ever going to get caught in this trade. Can everybody see that? Like if I wait for the confirmation, I'm never ever going to get caught in a market that just moves straight through it. All right. Does that mean can I get stopped out? Absolutely, I can get stopped out. Okay. But I will not get caught in a market that goes straight through that point. There are many people that draw support lines and resistance lines or whatever kind of lines they draw, and they just put their pending orders right there to trade in this direction. I can tell you that if you trade that way, the probability that that line holds, is probably 50%, maybe even less than 50%. Okay, so it's not a good enough method. Now, if we get price action occurring at that point, the probability that the line holds increases to at least about 60%. Okay, now that's a massive difference. All right, so what we're going to look for is we're looking for price action at these critical levels. So let me analyze this particular example. Now I just picked this one because I know this one is, I've just zoomed in. If we have a look at this, we can clearly see that these two candles, which are on the line, act as this one here is an inside candle, very clearly for all to see. Okay, and then we break the inside candle and it's a great trade in this direction. Your stop goes just above. We're applying the same principles as we would when we're doing price action. Okay, so if we are doing price action, I can bring the fractal back into my chart. Let me just add it in. Bill Williams, fractals. Let's make it white. Click it, and there it is. And you can see now that this is my fractal candle. Okay. However, I don't need the fractal there to tell me that this is an inside candle at a resistance level. All right. So please understand that. So essentially, the market comes up to this area which we were predicting could hold a level. Okay. And then we get what we want. We put the trade in there, and we trade in this direction. There's our stop just there. Any questions so far? No, we are all good? Excellent. All right. One of the tricks when we trade this method, because we're trading straight off a line, Andrew is asking, can it apply to a daily? Andrew, as I was at the start of the class, it can apply to a chart from 15 minutes onwards. Okay, so the method works quite well. I prefer a 4-hour chart. Can I use it on a daily? Absolutely. Okay, so it just depends what suits your particular needs. All right, so one thing that I want you to be aware of, okay, and this is part of the trick. So in this particular example here, I could have also drawn a line down the bottom, okay, like that. Now, the reason that I'm drawing this bottom line is because the bottom line could act as support, correct or not? We all agree with that? And the bottom line has been drawn correctly as well because they're 2 consecutive points. I extend it out. So when I zoom in again, what I'm really interested in is I'm interested in this area here where there could be support. So when you take this trade, there's a couple of things that I want you to do. First part is identify a region of support or resistance that your trade is going to be going into, where it may have difficulties breaking through. Okay, and then what I want you to do is you need to measure out your risk. Okay, let's call that X, and I want there to be at least 1.5x before you run into support. Do you know what I mean by 1.5x? If this distance here was, say, 50 pips, I want this distance here to be at least 1.5 of 50, which is 75. Does everybody understand those mathematics? If there is not 1x available for you to go in and get, just walk away from the trade, even if it has the correct setup, etc., etc. Are we all clear on that? Because this is where most of you will make a mistake. Yes, we're all good? All right, so if I measure this one out, the stop on this one would have been about, say, 35 pips, and 75. There was 2 to 1, so that before you run into the support, there was 2 to 1, okay, on this particular trade. All right, so let me just go in and make a couple of notes. Okay. Make sure we have at least 1.5. Oh, I just hit delete accidentally, sorry. So make sure we have at least 1.5 reward risk, or do not trade. Okay, so we understand that. If we don't have at least 1.5 reward to risk, do not take the trade. All right, so let me show you some more how it works. I think I had some drawn out already. Okay, have a look at this one. I'll zoom in. Okay, we can clearly see here, this is my first point, this is my second point. So even when the chart is over here somewhere, okay, I can draw this line. All right, now when you look at this trade, it looks like a nothing kind of trade. And if I draw the bottom line as well, the bottom line would have been something like that. Okay, so when the chart was even here, at this point here, we were looking for a trade over there, or we were looking for a trade over here. Okay, and it doesn't matter, but those two areas that I've marked are areas where I would be definitely interested in taking some kind of a trade. All right, so if we analyze it and we look at the first one up here, this is actually a body engulfing setup. Okay, so some of you may not want to take the body engulfing, but if you did, if you measure this one out, you would say, there's my stop. This is where I can possibly come into trouble. I can see that this distance here is clearly more than 1.5 that distance there. So there's no problems. You would be quite able to take that trade. If you did take this trade and we try to take a trade here back up, all right, we start to look for the price action. And look at this. Let's just say that I move my line a little bit like this, so to try and make it fit in. And I try to take this trade here. Would you say that that was a correct setup there? The line's not quite, but it's not too far off. Do you think that this setup would have been an inside candle to try and trade this direction? Yes or no? The answer is yes. It's an inside candle. However, this is the beauty of price action. Look what happened. This candle breaks the downside, not the upside. So what happens? We cancel out the order straight away. Okay, so that goes away. We may have looked for it again over here somewhere. It doesn't happen again, and then it breaks down. So price action protected us from a market moving straight through that point. And this is what I'm talking about. If I had a pending order over here, I would have already been in the market and then got stopped out somewhere. All right, and that's very, very important. All right, let's look at a few more. Let's have a look at this one. You will find them all over the place. Okay, if we look here, we go 1, 2, I draw the line, expecting something to happen over here. If I draw this line up here, something like that, this is where I'm expecting something to happen as well to try and bring it back down, or one in that direction. So let's look at the first one. We come here and we get a beautiful inside bar, inside candle situation. There's the peak of it. We get triggered and away we go. Okay, when it comes back up to the top one, let me just draw it a bit better. So when it comes back up to here, we clearly see that the market just goes straight through. No price action occurs. So therefore, we have the protection and we don't take a trade at all. Are we following, guys? There's a couple of situations that I want you to ignore, for example. Let's say, look at this one. When the angle gets really, really steep, so that would be one there, and that would be one there. But when I try and join these two lines now, see, like it's very, very steep, and there's it just doesn't look right. Okay, so if I zoom out on it a little bit, let me just get rid of these other ones. We can see here, it just doesn't look right. Okay, if I was gonna, about this angle, what do we call that? If we look at a clock, what's that? Is that 2 o'clock? Let me just draw a clock. So if I draw a clock here, so if I do a circle around there, that's 12, that's 1, that's 2, that's 3. Where does this fit? I feel like I'm talking to my son here. About 2 o'clock. All right, so let's say we don't want the line to be more steeper, or the gradient of the line steeper than about 2 o'clock or 10 p.m. 10 p.m. is the other way. 10 p.m. would be about there somewhere. Does everybody understand what I'm trying to describe here? Please, if you don't, please let me know that you don't. Okay, so this is just a rule of thumb, right? I just do it with my eye. Like, I don't physically get out a clock and look at it. I've just actually, this is the first time I've explained it. This strategy is all in my head. It just happens automatically. So I just want you to understand that. Okay, all right, so let me rub all those things out and get rid of those. Okay, all right, let's have a look at some live charts. Somebody nominate a chart for me, please, and we'll have a look at it. All right, anybody just tell me a chart that you got a live trade on, and we'll have a look at it. US Swiss. Oh, I don't trade the Swiss anymore, but okay, let's look at it. US Swiss. Okay, US Swiss right now. Okay, let me zoom out a little bit. I always like to zoom out. I'm on a 4-hour chart. Okay, so the first thing is, this is a good example that something that may happen on this chart, and you need to learn this. If I join these two lines there, like that, all right, now I know that right now there is a point there, but I'll tell you, if this market starts to move in this direction, this level here will disappear off your chart. It will no longer be there unless we go lower than that. If it does not go lower than that, sometimes it just disappears, and you need a little bit of experience to have a look at use this indicator. In any case, let's just say that you got it wrong and this little peak stayed in there. This level in this particular example would still be a good level. Okay, now I've just tried to make this as mechanical as I possibly can for you, and the reason I've done that is to help you draw the line. Most people do not know how to draw the line. Okay, so I've now instantly made you probably better than 70% of people that draw lines on charts. Okay, just by doing this simple thing that I've just shown you. So what I would be looking for over here, this would be a trade that I would be very, very much interested in. Okay, if the market got to that level, and at the moment that's the only thing that I would be really interested in this particular example. So let me have a look at another chart. Someone's saying Kiwi Yen. Kiwi Yen. Let me zoom in a bit. Okay, see this line here is just, for me to touch these two, because it's so little, okay, because it's so little, and it's come out, it just doesn't look comfortable to me. Okay, so this would be, I wouldn't draw this line here. So let me get rid of it. Let's change a time frame. I'm on a 4-hour chart there. Let's go into a 1-hour chart. Let's see if we can see anything. Okay, 1 hour looks a little bit different. Let's just give it a little zoom out. Okay, straight away I want to draw this one. Now this one's really, please note that if this continues to go up, this point will move and I'll have to redraw my line. Okay, so this one here is not quite ready for the top side, but the bottom side, let me just draw that for you. The bottom side is, and it could actually turn into, this is probably an ABCD pattern. Can I just check something? Sorry. Yeah, 127. Actually, sorry, based on a different method, this is an ABCD pattern where you got A, B, A, B, C, D. Okay, this is a 127 Fibonacci extension, and this is a 61/8 retracement. Okay, so if I'm confusing you, just ignore everything that I'm saying, but it's a solid pattern. I can see it, my eye just knows, it just looks at it, but let's stay focused on what we're talking about. So let me get rid of this line for a moment. Oh, no, I'll leave it. We can look for a trade over here somewhere. Okay, so when this starts to pull back down over here, this is where we would be looking for the trade. And this is, I'm basing that off a 1-hour chart. Okay, so that is Kiwi Yen. That's what we're looking for. All right, the top one's not quite ready. As soon as it starts to come down, that top line will lock in, and then we can look for that trade. All right, somebody else is asking me Aussie Yen. Give me a moment. That was off a 1-hour chart. Aussie Yen. Let me go 4-hour first. This is a really good spot here. Look for a trade here. Okay, so hopefully this continues to move up. That line will move with it. Okay, and look for the price action right here. That's the trade. All right, so we're very close. We're probably what? If it just pushes up about another 40 pips, then look for the price action, and we should be able to get a nice entry off that one there. So this one looks all right. So this one's, I'm on a 1-hour chart, Aussie Yen 1-hour chart. Okay, so, and it's, I think this one will set up. I just got the feeling that we're going to keep going here as long as it doesn't continue, but if it holds and then gives us the price action that we want, then we can hit it back down. Okay, Aussie USD daily chart. Let me get it up first. Aussie USD daily chart. Okay, oh, that's a good question. So basically, the question being asked is, and this is one of the things that you will experience. If we count the tops here, you go 1 and 2 there. However, look at this, there's a top in there, and if I draw the line through that, the zigzag does not take me to that level there. All right, and if I draw my line, we notice that this breaching my line. So the question is, what do we do? Now the reality is that was the Brexit line. Okay, so this was like this freaky big candle. This doesn't happen very often. Okay, so it would be very, very rare that you see that, and that's why a lot of times when I get that big candle, I often try to ignore it out of my chart. Okay, as long as the market didn't all of a sudden change, sorry, the chart changed so much so that all the price has gone totally down or something like that. So in this particular case, I would be okay to ignore that. So if I extend out, I'm kind of this. Let me see if I can make it look a little bit better. It's I got a little bit outside there. It doesn't have to be perfect. It's okay-ish. So if I did that, you would have had an inside candle there off that one. Okay, so you would have entered in this direction, and that level is one to one. Okay, so whether you took remember, in every method that I ever show, I always want you in your trading plan to have a rule about your one-to-one level. Okay, these type of method, we should be getting, I think, better than 50% win ratio. So one-to-one method will work on a better than 50% to win ratio. Okay, if we go to 1.5 to 1 with a 50% win ratio, it gives us a healthy level. Okay, all right. Let's come into like a really small time frame. Let's have a look at that. Let's go into, say, like a 15-minute. So this is the problem with smaller time frames, is that we can get these freaky candles like on a little news event. So what I really want to do when we're in smaller time frames, see, I don't want these things in my chart, so I pick a region, a moment where the chart is smooth. So if I look at this chart right now, that's not smooth. I'm not interested at all. You can see that it looks really wonky. You know, what I want is I want this. I want smooth things like this, you know, this kind of stuff. If we look at this one here, we've got a little bit of smoothness, then you've got this big long one, little short one, big long one. This is awkward. Okay, so this kind of chart, we're just not interested at all. So when I see that, even I'm on a 15-minute, I just say no. So I step up some time, more time divisions until I see it. I look at this one here. This looks really bad too. Look at all this. It's outside of that, so I'm going to ignore that. So I've got to step up some more. Now this looks like a nice chart on a 4-hour here. This looks really good. Okay, you can see how it's nice. Okay, that's what we're looking for. We're looking for smoothness. And when I look at this one, we can draw a line there and see what happens when we come back down. When you get better at it, okay, when you get better at it, and you can, you know, this would be a legitimate line, okay, but as per what I told you right now, we're not going to include it, so my line would have to be like that. Okay, so until we get better, let's just choose 2 consecutive points, and it will help us find other levels. And remember what we're aiming for. We're aiming for the third touch, price action confirmation. Someone's asking me for gold. Let's have a look at gold. Gold. I want a 4-hour gold chart right now. Let me go to a daily first. Who took the gold trade we took on Monday? Wasn't that a good trade? Okay, there's a nice line there on a daily. We're not quite at the level yet. Okay, let me go to a 4-hour. We're in that same congestion. So we're just drawing these lines as such. Okay, so what I don't like about this chart is I don't like these two candles. Okay, it doesn't look smooth enough to me. All right, so when I see like something like this, it doesn't look nice to my eye, so then it's just much easier for me to just walk away from this one. So this one here, I don't like it. You can see how I get picky about my charts. There's so many charts I can look at to find something better, so I don't try and push it. Euro New Zealand. Euro New Zealand. I don't think I've looked at this chart ever in my life. Let me have a look at the Euro Kiwi. Euro Kiwi 4-hour chart. Let me go to daily first. There's a really good triangle forming here. Okay, this is a good line. So you can wait for it to come there and try and hit that one. And that's off a daily candle. Let me step into a 4-hour. Let's have a look. Okay, see how this little bit here just got awkward? It was going smooth, 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 and this just got tight. When you see that, that's it. I'm not interested in this chart anymore. Well, at least not on a 4-hour, but on a daily, it looks better. Okay, and sorry, I was going to say something there, but I changed my mind. Okay, have I missed anybody's requests? I think I've got them all. So we're understanding what we're doing here. We're understanding what the aim is here. We're trying to draw more lines onto our charts. Okay. I'm trying to simplify the drawing of the line process for you just to make it a little bit easier. And we are implementing a price action entry for our trade. You will be surprised at the results that you are going to get with this method. Okay, really, really, really surprised. Okay, so but just remember, this is a counter trend method, and if you're trading a trend-based method, you could get triggers in both directions, so just be aware of that. Don't get confused. Different methods, different it could and time frames, you could trigger in both directions. Okay, all right. While I still have you here, I'm looking at our US yen trade. Let me go back to a daily chart. Who's on the US yen trade? Remember we took that trade live, so we can see here I'm still on it. It's reached over 1.5 to 1. I did message that out as well. And guys, you can see my running balance here. Okay, this account started on 5,000. Okay, you all saw that, and this account is also missing one trade. Okay, right now it's roughly at 6, and that's only like 9 trades in or something. All right, so but I think we've triggered 8. We had 9, but the Euro USD didn't trigger. It broke in the other direction. All right, so I hope you all having some success during the trading challenge. Remember, the exercise was to really just push ourselves and just discover new things about the way we trade. I did close out my GBP USD, okay, and I did give out the reason. It was just coming into that tough support region. So where is my GBP USD trade? There it is over there. So it didn't quite, I didn't quite hang on to that 2 to 1, and the reason was, let's have a look at it daily. We were having trouble here breaking down, okay, and consequently, look, I actually feel really nice about it. It's bounced back, but I got out right down here. Okay, I did call it out when I got out, and I think I took 1.5 out of that trade. Okay, and I listed it as a 1.5 profit as well, which you just saw on my account there. The Euro AUD, I've been stubborn on this one, and I'm still there. Let's have a look. Euro AUD. It's on the other account, remember, this particular trade, but I'll just highlight it to you. My entry was about here. We got so close, and then we've pulled all the way back, and now it's coming back. The good news is, tomorrow, if you did not take this trade, you could get an inside bar to take it back down again. Okay, so look out for that one tomorrow. That's the Euro AUD. Now my stop is up there. If I do get stopped out on this trade, if on the 1-to-1 method, I make nothing out of it, but I don't lose anything. On the 2-to-1 method, I will lose 250. Okay, so but that's where the stop is. It's up there. But like I said, unfortunately, this is the only trade. I took it. I didn't realize I was logged into a wrong account. Any questions on anything, guys? Anything about today's method? Anything about trading? About anything? No, we're all good? Okay, well, you're all following on Twitter? You're all receiving the messages live? It's just in case some of you are not. At chat FX. Okay, so if you're not, just look me up and follow. And if you set alerts to live alerts, you'll get it like an SMS. Because you could be following like 100 people, but you only want to get alerted live whenever they send something out by whichever ones you want. So just click on live alert and you'll get it like an SMS. Okay, so it's just a way that I can easily communicate with you when I've seen something. So for the ones that need a little bit more hand holding, it's a great tool that enables me to notify you. I saw something, I'm about to take it. If you want to look at it, look at it. Okay. Question, which position should set up in the engulfing bar? Which chart are we talking about, Ricky? We're talking about the Euro AUD? I think we are. Here, these two candles right now. Let me change my chart because this to the chart that you're familiar with. Give me 1 second. Okay, so when you look at this chart now, you can see that we're in a downtrend. It's pulled back, downtrend, it's pulled back again, and if it continues like that, that's the trade that we're looking for. So these are the two candles that we're interested here. So what we're looking for is we want the current candle, this one, the red one right now, we want it to stay inside those two levels. If it stays inside of those two levels, and let's say it finishes exactly like it is right now, well then tomorrow we put an order there, and if we break it down, we trade it down. Okay, if you're already in the trade like I am, I'm not going to double up into the position because I'm already short. I'm short from over here when we had these two. Okay, so I went all the way down and all the way back up. So my stop is up here. So if you trade it here, your stop will be there. Any, is that clear, Ricky? Does that make sense? No, it's not an engulfing, it's an inside. So basically this one will be inside of this one. Okay? For it to be an engulfing candle, it would have to look like this. That one would have to be bigger than that one. All good? Alright guys, well I hope you like this method. If you need to review it, just ask for the recording and we'll make sure that we get it out to you. Yes, Todd, that is the Euro AUD that I was just talking about just then. Okay. See how you go. Any questions? As always, please email me. Always send me a screenshot. Make it easy for me, please. I get a lot of emails, so I just look at your screenshot, I'll draw on it, and I'll reply back to you. Hope you all have a fantastic weekend, and I will see you all on Monday. Take care. Speak to you then. Bye for now.